Welcome again. This is Robert Schein, Managing Director and Partner at Blanke, Schein Wealth Management. Thank you for joining us. This is December 13th of 2022. It's a Tuesday. We just received the inflation report for the month of November, and it was actually better than expected. We still have inflation around 7.1%, believe it or not, but it actually is now trending lower. And that is a breath of fresh air for the equity market. Stocks are up, S&P, Dow, and NASDAQ by triple digits all across the board. In fact, the Dow and the S&P are now closing in on the 200-day moving average. Why is that important? Well, if we get close to the 200-day and close above it, that is sort of setting the table for more of a positive rally, or even the Santa Claus rally to continue for the next few weeks. We do believe we could see the uptrend continue, but we will see some resistance in the new year. So we position accordingly. Watch the Santa Claus rally. We position accordingly. We rebalance portfolios. We're taking some off the table. Again, we're still doing our sort of a tax neutral strategy. So making certain that year end, we're basically squaring up portfolios as best as possible. So there is tax neutral, or not as many cap gains, or no cap gains if at all possible. That's the name of the game. Again, if you have a portfolio outside of here at Blanke Schein Wealth Management, meaning like real estate or any other transaction from a capital gain standpoint that you did in the year of 2022, please let us know. Call us immediately so that we can hopefully offset that in the best manner we know how in your portfolio, if there is even an opportunity for that. But we can look into that for you. That being said, as we're clearing through, we're going through our move, and later this week on Friday, we move from our current location, just basically less than a mile down the street, but we're moving to El Paseo. And so we're looking forward to our clients coming in. Once we're set up, give us some time to get set up, and we'll have a big open house for everyone to take a look at it in the new year. But in the meantime, as always, as you're going through boxes and as you're moving, you always discover old relics or old memories. And that's what we've been doing for the last couple of weeks as well on our nights and weekends here. And I came across the 1970s. I picked this up in a bookstore back in college, in a sort of a vintage bookstore. And it's a 1970s Life magazine, June 5th of 1970s. And the cover is the inflation, recession, and the frantic bear market. And if you go through it, as I was doing, basically you're talking about the more dollars keep buying less and less. And that's the same story. They basically said that 1957 through late 70s and 1970s, if you had $100 now, you need $134. So about a 34% inflation over that period of time, simply because that's what we're seeing play out here. The difference is that the unemployment market, the housing was a standstill, housing halted, men are out of work. Right now, that's sort of the difference that we're seeing. And that's what the Federal Reserve is really talking about right now, really concerned about, is the labor force participation, the JOLTS number. So basically, at the end of the day, what that means for everyone is that there's 2 job openings for every one looking for a job out there. And so that really puts stress on the small business owner or even the businesses. And so because there's wage inflation, people are competing for, not too many people looking for jobs out there. And so that's really what's different now than the 70s. That wage inflation and the inflationary pressures will put pressure on the balance sheets for corporations for 2023. We're going to see how that shakes out. We're going to look for the fourth quarter reported in January and see how corporations actually continue to earn. Believe it or not, they've earned, actually grew their earnings this year for 2022. Now it puts a question mark on what does the top and the bottom line look like for next year. Before we get there, tomorrow, as I said, if you tuned in last week, I talked about what the market is really paying attention to. And I basically said, hey, listen, put December 13th on your calendar, followed by December 14th. Tomorrow we have the Federal Reserve Chairman, the 2-day meeting. We expect another 50 basis points increase in the Federal Reserve Fed funds rate, which brings us well into about 4.5 territory, and the largest sort of 1-year increase that we've seen in quite some time. So the Fed is now trying to get their terminal rate, or their their baseline rate to from 4.5 to basically 5. So we could see another one in February of 25 basis points, and then a wait and see, a pivot, a pause, whatever you want to call it. But the Federal Reserve has to basically then hang out and see what the impact is and the cumulative effect of what they've done all in 2022 and let it play out in 2023. So you got to be cautiously optimistic as we are. We're going to see the Santa Claus rally continue, but we're also going to position portfolios. But tomorrow, the Federal Reserve could change everything, as we learned last time Jerome Powell spoke. It's basically the 2 to 2:30 hour is really when the trading really begins in the press conference. So got to pay attention. Markets are paying attention to that. We are too. Again, but we're doing year-end rebalancing and positioning for 2023 right now, as well as cleaning out and cleaning up everything that you don't need. So it's kind of sort of a spring cleaning for us here at Blanke Schein Wealth Management. So it's a good feeling. Thanks for everyone who's been wonderfully supportive. We thank you for all your wonderful letters, notes, and emails, and even stopping by. But that's our update for today, and that's what we're watching. So you should be too, as markets are. Take care. Have a great day.